So here we go, a new week in the stock market, and there's a lot of new stories to cover for you guys. And also, I'm going to talk about a stock that I'm considering selling at the moment. So I hope you enjoy it. It is the start of earnings season this week. We do start getting the banks reporting on Friday. So the week after is when we'll start really kicking into earnings season. So that's something really exciting that's building in the background, but I won't cover it that much today. First of all, Aviva. So I mentioned this on yesterday's video. Aviva had a very good day on Friday. It was rumoured that they were going to get bought out by a rival company for £6 a share. I'm sure I said on the video that it was a rumour, but apparently I didn't. So it is a rumour that they're going to get bought out, and we know of rumours, they can quite often not turn out to be true. But if it is true, and Aviva have been offered £6 a share for this stock, I would be accepting if I was Aviva. I'd be like, yep, we're taking that. And £6 would be a very good deal. I would be happy with that. And if Aviva was to be sold, I would then go look and potentially put that into either legal or general, or I'd probably replace it with DS Smith. So we'll keep an eye on that. I think that if it is public news, it's probably not going to happen. And if it's not going to happen, if Aviva can go back into the £3 range, I will then pick up some more shares in Aviva. And I've only held this stock for kind of 3 months-ish or something around that. So I really have like half a position that I still want to build up in this one. So that's something that's going on with Aviva in the background in case you missed it. Something else that's going on in the background, and it's not major news at the moment because obviously it's good news. If good news happens, it's never reported in the media. Only bad news goes in the media. And the good news is around the estate of the UK mortgage and housing market. There's currently a bit of a mortgage war going on with lenders. Lenders have now decided to put out a 5% interest rate or a below 5% interest rate for mortgages. This is really good news. This is a start of the sign that the competition's coming back. This is what the housing market needs to get started again. More price wars between the mortgages, housing prices going cheaper. I think this is a really positive sign for the market, and I do think the UK housing market is towards the bottom now. I think we will see the bottom in the next 6 months. So I think when we start getting towards summertime 2024, that will be roughly where we see the bottom of the UK housing market, and then the mortgage rates. There should be a bit more of a mortgage war going on with lenders, and then as well as that, housing prices probably would have took the last drop, and they will look quite attractive out there. So that's really good news that's going on in the background there at the moment, and for me, that may mean that I have the last opportunities to buy the likes of Bright Developments and Forterra, so we'll be keeping an eye on that one. Over the weekend, I'm sure you saw this. This has taken most of the headlines. The war that's currently going on between Israel or Hamas. I won't say too much on my thoughts on this because I know it's a very sensitive subject and it's very political. What I will say is that no matter what country you're from, no matter your race, whatever your religion is, war gains nothing. All you end up is lives destroyed on either side. It's not good, and we know this has been going on for many years and it's still not being resolved, and it continues. And I know people have different opinions on the situation, but my situation is that, hey, no one's a winner here. You know, it's going to destroy lives on both sides, and it's crazy to think that people still choose this option in 2023, even with the education that is out there. So obviously not good out there at the moment. That does mean that there's a couple of stocks that are based in Israel having a bit of a dip in pre-market. InMode is down 6%, and I said I didn't think InMode will ever drop relatively really low, but it's starting to happen. It's having a really tough time at the moment, as you can see here, down 24% in the last month. This drop today is only going to help it go lower. So very interesting opportunity. And that means that also Perion as well, another stock that's based in Israel as well, is down 3%. Not as much as InMode, which is really surprising, but down 3% in pre-market. I've always struggled to get my head around the complete business model of Perion, so maybe I give that another go. And there's a point really where I do look at it and go, you know, 13 times earnings, obviously it'll drop again today. Is there a point where it's worth the risk when it gets to that sort of valuation, just have a little bit of a smaller position in it? I don't know, I'll have a think on that one anyway, but two interesting opportunities there. What it does mean is inflation. Actually, we're going to tie this to oil as well. Inflation is going to be reported this week as well. The inflation rate, after increasing the last 2 months, is, according to consensus, going to start dropping again, which is obviously really good. Obviously, the rise recently has been because of oil prices. Oil prices have been going up recently, and that's caused a rebound in inflation. But even though with the rise in oil prices, it hasn't gone up that much. And when you do look at core inflation, which obviously takes oil out, you can see that the downtrend has still continued. Last month was 4.3. We are rooming to get into the 4.1% as consensus suggests. If we do hit the 3%, that'll be really good. Obviously, the main reason why is oil prices. Oil prices have went up a lot recently, and that's what caused inflation to go in the wrong direction. And since then, if the oil prices have been coming down, which is positive. Now, you would see there is a little bit of bump up. Oil prices have gone up a little bit because of the situation that is going on in Israel at the moment. But if we do see oil go back on a big bit of a downtrend and do start getting to the $70 range, that'd be really good. And that'd be really good for inflation. Realistically, still in my opinion, you look at true inflation, it's currently 2.4%. If the Fed weren't using these lagging indicators, these indicators here are using out-of-date information. If you were to use more real up-to-date information, I think inflation will be in the 2% range. So it's just a matter of time before this actually does start showing 2% still. But obviously that's probably the big thing that's going to be moving the market this week. So that's something to be keeping an eye on. Next thing was Boohoo. Mike Ashley actually came in and bought some shares in Boohoo. We talked about this the other week. I said the recent update was terrible. The financials were very poor. The stock dropped and then it recovered. And I thought, oh, I wonder if that's Mike Ashley, Big Mike, buying up a few shares. And it was. He is now Boohoo's largest shareholder. He has now taken over Mahmood Kamani. So I don't know what his thoughts here. Obviously, we know his game plan. He loves buying cheap companies and thinks he can make money on them. I don't know if this is that he wants to own all of Boohoo. I don't know if he wants to potentially buy parts of Boohoo. I don't know if he just thinks Boohoo is too cheap and the market's getting it wrong. Only he knows, but I don't know why he's buying this one because I think there's a lot of things going wrong with Boohoo, and I personally, for me, I won't be buying it. But obviously, he's seen something there, so I guess a bit of a positive there. The next thing is Pinterest. So I'm actually thinking of selling my Pinterest shares, which is the title of this video. I've been a shareholder in Pinterest for around about 4 or 5 years. It IPO'd, the stock then dived, it went all the way down to the teen range. Started buying up some shares. The stock then went a little bit bonkers. We ended up selling up about half our position in Pinterest for around about a 300% return, which is absolutely amazing. I can't wait until we get into a bit more of a bullish market and we start seeing them gains coming back in, because it does seem a while since we've seen them kind of crazy gains. We saw some in kind of like the start of 2023, but yeah, obviously that was a really good performing stock. Obviously the CV situation did help it a little bit and the stretch valuation, but I think it would have got there anyway if it wasn't for that. Had a bit of a reality check on the share price, went in my opinion a bit too low, but now he's back at $28 and I think we're up around about 20% on this position right now. But an 18 billion market cap company, I was looking the other day and I think for me I might sell Pinterest now, because I look at the CEO, which is one of the reasons I bought, has now left the company. He left in 2022, which was Ben Silberman. Bill Ready has come into the business and he looks like anything but ready to kind of run this business at the moment. If you do look at the gross margins of Pinterest, they currently sit down at 75%, which is very good gross margins. And if you actually look at Meta are very similar. They've got Pinterest is 75% gross margins. If you look at Meta's gross margins, they currently sit at 79%, so theirs is slightly better, but still very good gross margins. The difference between Pinterest and Meta is when I bought Pinterest, I thought they would get up to the same profit margins as Meta. Maybe not exactly the same, but they would get pretty high. And you look here, their profit margins are actually negative 10%, and Meta's are currently 18%. And Pinterest is way far off the profitability that I thought they would be doing right now. And you can see here they're going to lose money this year. They're going to lose 300 million. And they are forecast to go to profitability, but the profit they're going to do is 158 million in 2 years' time, 388 million. Let's call it 400 million. That means that at the 18 billion market cap, this company's going to be trading like 45 times earnings in 2 years' time. And for a company that's going to grow around 10% with 45 times earnings, I think that's fairly valued. So I'm not seeing much upside in 2 years' time on this valuation, because the profitability isn't ramping up as much as what I thought it would when you compare it to like Meta, which is very similar gross margins. Even though the earnings have been okay, I still have seen things when I've looked into the report of the earnings that have disappointed me. So if you actually look into the recent earnings, for example, the revenue obviously shows a bit of an increase. The thing is, though, the cost of revenue has gone up slightly. Research and development is up as well, from 233 to 269. Sales and marketing has gone from 212 to 243. G&A has gone from 89 to 99 million. So all the expenses are increasing on this business, and that's not good. I thought there'd be like a Meta, there'd be a year of efficiency managing these costs, and I feel like they're not managing these costs to get to the point of view where they're kind of doing the same numbers as Meta. And I'm like, can they ever get to profitable if these are the numbers and they're increasing? And as well as that, when you look at stock-based compensation in last year has also nearly doubled under the new management team. So I look at Bill Ready here and I'm thinking, you're not doing what I thought you would do. I thought you'd be driving up profitability more, and you're not. I look at the costs are going up. I look at stock-based compensation and it looked like they're taking the mick out of the shareholders a little bit, so I'm not happy with that. So I'm like, For me, I just look at this and go, Pinterest, the valuation, I'm not seeing much upside. I'm not happy with the direction the new CEO's taking them in. And especially right now, could I use this money for better opportunities? I think so. I look at the opportunities that are out there. You got InMode that's going down a little bit today. PayPal, for example. There's a million opportunities out there that I look at and think I could use that cash for a lot more better opportunities at that right now. So I'm thinking that maybe it's time to move on from that one. And I'll look at Pinterest and actually go, it was a stock that worked out for us. It was a stock that we made 300% on, and even the other big deal or the other shares that I held, I'm still going to walk away with, a good 20% return there, which is still okay. Obviously, in a bear market as well. So yeah, not too bad there. And the last thing I wanted to do is mention SmileDirectClub. I'm not sure if you saw SmileDirectClub over the last kind of couple of weeks. It has gone bankrupt. Which was announced around 3 days ago, and obviously this is stock that hasn't performed amazing, and it's things gone really wrong for this business. Now I've got to say, it's really funny when you do this investing game, especially the YouTube game. I actually brought a video out 2 years ago saying that I believe SmileDirectClub is a stock to avoid, and I think I said on that video that I think they're potentially going to be heading towards bankruptcy, and I made that 2 years ago, and it's a stock that obviously I didn't buy, and I got what I thought about it. I thought it was a avoid, and obviously I got that right. And I thought it was really funny because obviously me 2 years ago thought this was a stock to be avoided, and obviously called it right. And it made me laugh because me making that video, no one's talked about that. There's no new comments on the video going, oh, that was a really good call there. But I tell you what, if it was the other way around and I made this video on SmileDirectClub and it went down, you watch the amount of comments that would be flooded on that video saying like, oh, you said it was buying, now it's bankrupt and everything like that. There would have been loads of comments on it. And it is true on the YouTube scene. Like, people only talk about you losers. Like, people never talk about when you get things right or stocks that go up. People only talk about when you've got things wrong and stocks that go down. It is a really funny game doing the YouTube side of it, and everyone always looks at your losers rather than other things that you've got right. And it's like Pinterest, how many people are going to come on Pinterest and go, oh, I remember buying in 2019 or 2020, or when you're talking about 2019, and saying it was a good opportunity. I remember making 300% on it. Like, no one's really going to talk about that. And it's funny that, this game, it's a funny game, is doing stock market investing, especially when you're in the public eye and doing YouTube videos. But hey, I thought I'd leave that there anyway. Hope you enjoyed the video anyway, guys. Let me know what your thoughts are on Pinterest. If you could hit the like button, and I'll see you in a bit.